The proof that you own a home is a legal document called a deed or a title. This gets signed over to you by the previous owner when you purchase a home. This is why when you buy a home, you will hire a title company to check the home's deed, making sure that it will be free and clear of any financial liens, like prior mortgages or unpaid bills, and to identify things that can affect your ownership rights, like easements, when others have legal right to access your property, and identifying and disclosing other potential claims to your property rights, like a homeowners association known as an HOA. They may take your property from you should you not pay your HOA fees. Any of the seller's financial obligations must be cleared up so you can start with a fresh slate. Now, let's say your title company screws up and misses something, or something wasn't recorded against the deed before you settled on your home. Well, for these reasons, the mortgage lender required you to buy what is called a title insurance policy. Until now, this added out-of-pocket cost was not optional when you buy a home with a mortgage. This title insurance has cost home buyers thousands of dollars and can't be financed in your mortgage. That means this becomes additional cash that you have to bring to the table. When you buy a home, you actually had to pay your title insurance policy in full at the closing table. As of now, title insurance is no longer required by mortgage lenders. Is this putting you at risk? Not according to attorney Stacy Mestayer, who is disrupting the home buying process as she claims that her company, Alita Group, is making home ownership more affordable, and that the elimination of the title insurance has been approved in all 50 states, including Washington, D.C. Listen now as Stacy and I literally rip this one apart. Stacy, thank you so much for your time today.
Thank you for having me. I appreciate it.
As you know, I'm a real estate broker in Maryland, and I've been serving the housing market in one way or another for about 30 years, so a long time. I've been buying properties for about 30 years now as a homeowner and also as a real estate investor. And in my current role, I really feel the pain for home buyers trying to afford a home these days, with companies sort of standing in line to strip, wannabe home buyers from their hard-earned money. Actually, a lot of these service providers stand in the way of the transaction completely. And, what I'm talking about really is the way the buyers look at it is unwanted fees. And this is everything from government transfer, recordation fees, lender fees, title fees, and let's not forget, yes, realtor fees, our services as well, and all the other costs that each provider needs to pay in order to facilitate a home purchase. Stacy, it shouldn't be this hard for buyers or sellers. And I'm intrigued to talk to you today. I heard one of your podcasts, and it really kind of stopped me in my tracks in what I've always said is a very big expense, title insurance, title fees. So we'll talk about that today. But I'm really curious and would love for you to tell our audience, you started a company called Alita Group, right? Thank you for that. And on your website, big and bold on your homepage, you are boasting that you're trying to make homeownership affordable, save money for buyers. So if you could just kind of give us a little bit of your background and tell us why you started your company.
Sure. So, I appreciate you having me. I started out actually as an attorney, so that's my background, and that's what I am by trade. I've been doing that for a very long time. And I found myself sort of interested in this field. I didn't have a background in title insurance at all, but I was working as a general counsel. So I came from a corporate law background and then found myself as a general counsel for a law firm. The law firm also owned a title company. So it was a little bit of an ancillary business. But I started to dig into it a little bit, and, it was interesting to me. I realized it was expensive, but I didn't really go much further than that until I started to see some of the title claims basically that were being filed by, lenders, and then they were being pushed by the title insurers to us as the title agent. And just that interaction in and of itself was interesting to me. And so I sort of started to look at it in a different way. And then because of the expertise that we sort of had in-house, being that we were a law firm and we were also a title company, that sparked an idea, and actually the owner of the law firm, and he had the idea of, well, what if we sort of took this concept of an attorney opinion letter, because after all, that's what was used in title transactions or in real estate transactions before title insurance was ever created 150 years ago. So what if we sort of went back to basics and figured out how to make that scalable and make it something that is a viable alternative to title insurance. And as attorneys, we can charge what we feel our work is worth. And so what if we did that, charge something much less than title insurance premiums, save the consumer, thousands of dollars in certain places, and really kind of change the industry a little bit. Now that it was a big idea. I sort of, not being from a title background, thought it certainly seemed doable and reasonable. I think most people who knew the title insurance industry very well thought that it was much bigger than that. But I think that naivete on my part, or at least that lack of industry knowledge, brought me to a place where I thought it was something that we should certainly try. And so that's what we did. And so I've been working on it for some time now, and, been through various iterations and various companies. It was sort of a, crawl, walk, run situation where we had to figure out how to create a product. And that product had to have certain things in order for it to compete with title insurance, which is obviously a very well-established product. And so it had to have, first and foremost, some sort of insurance around it that made it made it provide coverage that was comparable. And so that's where we started. From there, we sort of operationalized it, figured out how do we produce it at scale? How do we provide it to lenders in the marketplace? And, the operationalization of it was sort of the crawl and then the walk. And then from there, we created a leader group. A leader group is meant to be the run part of it, where we sort of, instead of creating a product and instead of selling that product to the market, we create a market for the product. And so by doing that, we created a platform where basically other providers come to us and get a license to produce what we call AOL Pro, which is an attorney opinion letter wrapped in an insurance wrapper that is intended to serve as an alternative to traditional title insurance.
How long have you been in business?
Alita Group has only been in business since this year, so relatively new. The product itself has been sort of in different iterations around for about 4 years now.
So I started my brokerage. I've been in the real estate business, like I said, for, serving the housing market for years, but I became a licensed agent in 2005, so not that long. We'll unpack a little bit of why I got into the business as we go through our talk today, but I just started Sachs Realty in 2017, so worked for a bunch of national brands. And when I entered into my own brokerage space, doing a lot of research into, technology, as you're kind of setting it up, you want to try and keep technology on the forefront, especially today. And I realized that being in this business for many years, that real estate's been lagging on the technology front, with the average age being mid-50s of a real estate agent, not embracing things like text messaging, for instance. We wanted to be on the forefront. And one of the technologies that really caught my attention, and I kept asking title companies, title attorneys, was blockchain technology. And I wanted, before we kind of dive into your service or title services and things like that, what do you think of blockchain technology? You just started your company. Do you think that is something that, regardless of whether you're doing, a title policy, the traditional title policy, like what home buyers have been buying for the last 150 years when they buy a house, versus what you're doing right now, do you see blockchain technology as a threat to the title industry altogether?
It's an interesting way to pose the question. I think people look at it differently. It's funny, the word blockchain tends to be sort of a negative word sometimes when people react to it. I think the introduction of some sort of ledger technology like that would be immensely valuable, but valuable in the way of providing value to consumers and people that are actually trading these houses as opposed to possibly the title insurance industry, because a lot of that industry is built around doing title searches again and again and again when a property is sold or even refinanced. So the same work is sort of being done over and over again, and it's really hard to leverage the work that's been done previously. So I would say from that perspective, it would make a lot of that go away, which I think would probably hurt the title insurance industry financially. So maybe that's not something that they're fully supportive of, and I don't want to speak for an entire industry, but I would hope from a consumer perspective that we would be supportive of something like that, because it would save money for the consumer who's paying the same amount. Honestly, the reason, I'll tell you a quick story, the reason we sort of had this idea in the first place is a colleague, friend of ours in the industry, who's been around for a very long time, well-known guy, and has been in the title insurance industry, said that he really hadn't thought about it until, because, his thing is we don't always think about things until they happen to us. And so his mother was a widow of a veteran, and she, always would send him the information that she would get in the mail, and she wanted to refi her home. So she sends him this and says, "Is this a legitimate offer?" He reads through it, says, "Yeah, it's great." So she refis, did a, streamlined VA refi. And a couple years later, got another offer, even better. This is obviously during the boom. This is not in the past couple of years, but so she goes ahead and, signs up for it again. And he being a person in the title insurance industry was shocked that she was paying again in a refinance the entirety of the premium over again. So I think it was $1,800. And then a year and a half later, another $1,800. And then another 2 years later, another $1,800. And that to him was personally offensive, because his mother didn't have that extra money. And so he sort of sought us out and had that conversation with us based on that experience. So I think it's people like that that would be hugely impacted by something like a ledger that, that was validated and that stayed in place, and that people didn't have to go back and repay for the same work over and over again.
So perfectly well put. And everyone that I asked the question to had zero knowledge of blockchain technology. And I mean, at least a half a dozen title companies or title attorneys I had this conversation with, and where you could easily Google it and go to news and you could see current articles that talk about blockchain technology and specifically with house title. Can you kind of give us an overview, and which, by the way, extends the fact that the industry at large is just completely behind in technology. So it's not just agents or brokers, it's also title companies, attorneys, and things like that. Can you kind of just give, for people listening, we're already starting talking about some, trade terminologies, and can you just tell everyone a little bit about when they buy a house, what is title work and what is title insurance? Just kind of from a little layman's point of view.
Sure. So when you purchase or even refinance a home, it's typically a requirement of the lender. There's a lender involved in the process that you would purchase title insurance. And what that involves is it's work on the front end. So the title company, that usually is also the same company that performs the closing and settlement. So closes your loan. It's where you go sign the paperwork, get the free cookies. They do their title work, which involves pulling information from the public record, also from what they call title plants, which are basically these big, houses that aggregate title data. So they pull all of the historical data. Usually in a purchase, it's, standard is 30 years, they'll go back. So they'll pull title data and they'll make sure that what they call the chain of title is clear. So it's basically showing that there have not been any intervening liens or anything that would have disrupted the title transferring cleanly or clearly from one person to the next throughout that period of time. So they're looking for things like, liens that have been filed without the owner knowing about it. They're looking for tax liens that may have been filed to make sure that there are no unpaid taxes, things like that. If everything is clear, then they will issue a title insurance policy. Even if it's not all clear, they'll do what they call title curative work, which is they'll pay off the lien or negotiate it down, or if something is still out there that should have been taken care of or removed, they'll make sure that gets done. And that's part of kind of the title processing process up until closing. They do all of that work at the closing. After the closing, once it's completed, they issue a title insurance policy. That title insurance policy is intended to protect against loss from defects in title that may come up. So ones that were either missed or that were not available in the public record.
And for just so everyone knows, they're typically presented with basically two types of policies: the lender policy and the owner policy. So can you kind of talk about that?
Yep, that's correct. So it's typically the lender in the transaction requires the lender's policy. So they'll call that a loan policy or a lender's policy that protects against loss from lien position being other than what it's supposed to be. And what that means is that the lender has a first lien position in a mortgage, meaning that their mortgage has a higher priority than other things in the public record. So that's what the lender's policy protects from. And then the owner's policy, and now it's all based on the same data, but the owner's policy protects against issues that would impact an owner and cause loss to an owner. So it could be things like an easement or, like I said, a lien of some kind on the property. So those are the two, and they're typically issued at the same time, but they are two separate policies. So that's sort of something that people talk about in the industry too. Well, is that really necessary? And that's something that we've addressed in the product that we've created, and that we don't separate them. We and the underwriters that support our program feel as if it is a singular risk that we are insuring against. And so it is all combined. All the coverage for our product is combined into one, whereas in title insurance, it is two separate policies.
When I hear it explained by, closing officers at the settlement table, they talk about it as the lender policy is something that pays or protects the borrower, really the lender, up to the amount that, they're owed on the property, and that the buyer side will pay above that. So if somebody put down 10 or 15 or 20%, they have a loan balance that's much less than what they paid for the house, that it would, their policy would cover what expense they have out of pocket in the purchase. Does that sound pretty consistent with the policies?
Yep, that is right. So the lender's policy would cover what I think they call the indebtedness. So basically what the loan balance is, the unpaid principal balance, and then, all those other ancillary charges. And then, yes, the owner's policy would cover up to the full purchase price or the value of the house. But that's only ever going to come into play if there's some kind of catastrophic event that makes the property entirely unusable, which is extremely rare. So I don't think it's in an owner's policy scenario. If a claim is ever paid, it's typically something that's either cured, and so it doesn't have to be paid, or it's very, very small, unless, like I said, it is a catastrophic event.
Can you give us an idea of some of the claims when you were working at the law firm that you would see against the insurance policy?
Sure. So it's usually things that are missed by a person. So something very common would be related to the legal description of the property. So legal descriptions have come a long way. A long, long time ago, back pre-title insurance or even in the beginning, they had what they called meets and bounds descriptions, and they were incredibly long, and they described a property in terms of, take 20 steps from the stake in the ground and go to the rock at the corner of it. And it was all very vague, but very detailed at the same time. Um, Now we've gotten to where a lot of the property in our country is platted, which means that it's broken up into lots and blocks. And so now often, instead of seeing 2 pages of a legal description, you'll see a short paragraph that says, lot A, block 2 of, and it'll describe the subdivision, and it will say where the plat of the subdivision is recorded. And it's as simple as that. So I will say, because of the way that things have historically been done, that legal description, whether it's 2 pages or a paragraph, gets retyped a lot throughout time. And which shocked me, frankly, because imagine the room for error when you're retyping this over and over and over again. But a lot of the errors will come from that. So if the legal description, and it must be precise, or else it's not describing the correct property, which causes issues. And so because of that, there are a lot of errors that come from something being typed incorrectly. Or it's as simple as, putting an A or putting one letter instead of a number, or another. And so you'll see that be an issue. You'll see maybe a lien didn't show up when they did the search, or somebody missed it when they scanned the title report. And those kinds of things can be problematic, because even if it's a $15,000 lien, somebody owes $15,000, and the person that is owed that money wants it, right? So it's little things like that. And often what happens in that claims process, and this is something that most people don't know, and I will tell you, just in the meetings that I've had in working on this initiative at the top levels, I'm talking DC people that I would assume would know these things, didn't know how the title insurance agency structure worked. And so the way that works is that you have title insurers, and there are a few of them that sort of control the majority of the industry. So you've got your First American, Old Republic, Fidelity, Stewart, these large insurers. There's 4 or 5 that control everything. I'll say it's 80% of the industry. And they are the underwriter of the title insurance policy. However, there's an agent in every situation. So the title agent writes policies on the underwriter's paper. So the agent is who is selling the policy at the closing. So if the title agent sells you your policy, something happens and you need to file a claim, you file a claim against the insurer, because what you look at when you see your policy is that I got a First American policy. So I would file a claim, and I don't mean to call out First American. This is true of any underwriter, right? But you'll file a claim against the underwriter. Now, I will tell you, the way that agents and insurers in this industry only are set up is that the agent takes 70 to 90% of the commission. And as a commission, I should say, 70 to 90% of the premium as a commission. Only 10, 20, maybe 30% of that goes back to the underwriter. So when they take that money back, they're getting much less than the agent. So when a claim is filed, that underwriter doesn't necessarily want to or feel that they should pay the claim, because they only took a small portion of the premium. So what they do is typically reject it and send it back to the agent and say, well, you're the one that made the mistake. You cover the claim. The agent then has to either pay the claim, but the agent also has, this is where it gets convoluted, the agent also has its own errors and omissions policy in place, which is basically professional liability insurance, because the underwriter requires that they have that insurance in place. And so the agent has to say, and this is the position that I was in as the general counsel of this agency, to say, well, do we just eat the $15,000 loss and pay it? Do we file a claim with our E&O insurer, because we know our premiums will probably go up if we do that, same as your car insurance would go up? Do we push it back and tell the underwriter we think they should pay it? I mean, there's all of these options. And so that's where it gets lost. If it goes to your E&O carrier, then you sort of fight with them about it, and they say, well, we don't want to pay all of this. And so you go back and forth with them. If you push it back to the insurance underwriter, then you're arguing with them. If you pay it, which is eventually what happens, but it takes a long time to get there, you've now spent a year, 18 months. And I'm saying that because we worked with a lender, a top lender in this country, and their expectation of title claims resolution was 18 months on average. So you've got somebody sitting in the wings for 18 months waiting for this to be resolved. Whether it's a lender, now that's more palatable. If it's a lender, okay, a lender can float that. But what if it's a person? What if it's a homeowner? And I always think about the scenario of, if I'm the homeowner and I don't understand title insurance, I don't understand the industry, and I file a claim and I immediately get a denial that says we're not going to cover your claim, I don't know enough to go back and fight that. I just assume that I'm out of luck and I better deal with it. And I just imagine how many people in our industry are getting those denials and having to deal with the loss of something that they shouldn't have to pay.
That they thought was covered.
They thought was covered.
Hey, do you like following your favorite people on social media? I'm now posting original content to Sachs Realty's Instagram, TikTok, and to my own personal X and LinkedIn accounts. If you care to, like and follow me on these platforms for shorter videos and posts, all to keep you, my favorite people, informed about real estate and the U.S. economy. Essentially everything that affects Americans in one way or another. Oh yeah, let me not forget to mention that we're now on every major audio podcast channel like Apple, Spotify, Google, and more. Also, don't forget, this and all podcasts are brought to you by our one and only SachsRealty.com, your one-stop shop for all of your real estate needs. Connect with us and our amazing nationwide network of agents, lenders, and title providers. Now back to the show. And listening to you explain this, the first thing that comes to mind is the homeowner wanting to sell. So if this is something that is holding them up in a sale of their property, the thought that they would have to wait 18 months for a resolution in itself could be, create its own problems. I think, what you're describing is sort of, I think we're at this turning point in the industry. I mean, as I mentioned earlier, I'm a real estate broker. Some of the things that I talk about on my show, I try to help the public as much as I can. I mean, truly help them because, just to give you a little background, I was a contractor, builder since 1989, a long time, 35 years ago. I started my construction company. And I'm in Maryland, so we have very high fees to transfer properties, transfer recordation fees, very costly. And I would get very frustrated because, dealing with real estate agents, because I didn't have a license, I didn't have access to the MLS, and, I was paying a lot of fees and I was doing their work. And, even back then, it was very frustrating that something was very broken with this homeownership process. And things have really just gotten so messy and so big and so complex, and the fees that people have to pay to actually buy a house. But, and I get it, human error and things like that. But what you're describing with this whole title policy sounds like a racket to me. I mean, as an attorney, do you think it's a racket? I mean, what you're describing, you've got a kingpin here, the underwriter, a handful of those that write 80% of the business. You have all of these agents that are running around that are also covered with policies or insurance, and you're saying they're really giving these agents a license to print money, essentially, on the claims that are very rare. Is that a fair assessment?
It is. I don't want to call it a racket. I think it's necessary in some ways, but it's also broken. So it's a broken system that has persisted over time because it's been allowed to persist over time. I think that there's a disincentive in place, and I say that because of the way the premiums are split, because of the way that technology has not sort of made its way through down to the consumer. I mean, there's certainly technological advancements that have happened that have benefited title agents, that have benefited underwriters, but you don't ever see where those savings make it to a consumer. And I think because of that, you've got these agents that can comfortably. Now, I mean, there's an argument that, and the title insurance industry has made this argument in response to our initiative to say that, there is competition because there's thousands of agents throughout the country and they're small businesses. And yes, that may be true, but I don't know that it's truly competition when you've got an entire industry of people selling the exact same product that they can't really change. And also, back to this disincentive point, they don't have to be efficient. They can close a handful of loans a month as a small mom and pop shop, or they can be a national agent and they can close thousands of loans per month. And each one of those can make decent money doing it. And so I think the problem with that is that you've got all of these thousands of small shops that serve, one county and they close a handful of loans a month, but they don't have any reason to ever be more efficient or to ever do anything for the consumer because they know every time somebody sells or buys a house, which will continue to happen, they will come to them and they will come to their shop and they will pay them thousands of dollars and they will get their title insurance policy because that's what they have to do. And there's just no incentive to make it better for the consumer. And that is sort of what has driven our initiative here.
When I purchased property where there was no lender in place, and I still feel the same way today, and I have friends of mine that are title attorneys and they think I'm crazy. I never buy the title policy. I mean, I never buy I buy distressed property, which is probably the riskiest. I buy it from auction, which is, again, I mean, not recently because even auctions, the properties are so overvalued right now. But I always skip the policy. And, because of what you're saying, I mean, a lot of these claims are not total loss, what you're really thinking that you're paying. It's like an insurance, buying a property insurance. How many times do you actually have complete loss claims? Now, I'm not telling people not to do it. I'm not advocating that they don't have some kind of insurance. I'm just telling you from what I do. And because I look at it as a cost, but I will also say by that, Stacy, that I've had even friends of mine that own title companies tell me, don't bring any more of your business my way because this is how I make my money and you're stripping it from me by not buying the policy. I've had them tell me this, literally tell me this. This is where we make our money. And I'm not begrudging people of making money. But what I am saying is that just like our industry is going through a massive rule change, being a member of the National Association of Realtors, we're under scrutiny. And a lot of that scrutiny is because of lack of transparency. And I think that what people should be doing to sell a service is they should be transparent with the service that they're providing, no matter what it is. And we don't see that, in a lot of these service providers like title companies. Like you said, the agent, a lot of times I say to somebody, hey, do you have a title company that you want to use? And they're like, well, I don't even know what a title company is first. And no, I don't. Do you have any recommendations? And then you can give them a couple references and say, call them up, ask them about their fees, find out, about their policies, things like that. But most of them don't. They just say, tell me who to call or what, or they'll just, and then they just lay down to the charges. And when they're extracting thousands and thousands more money out of these buyers, by the way, that they have to write a check for, they're not financing it. I certainly, that's why when I saw what you were doing, it really kind of perked me up to your service. I just want to lay down the foundation. There is no benefit here today that I'm receiving other than providing your information to my audience. You're not sponsoring the show. We're going through your site and talking about your services. And this is purely a service that I'm doing for our audience to say, hey, look, let's look at everything. When you're transacting, we've got a nationwide presence of buyers and people that call on us for, just advice. What do I do? Where do I go? So that's why I'm meeting with you today, Stacy. But before we kind of talk about what you do, I have to ask because, and I want to pull your website up also, show how some scenarios of some money saving examples that you have on your website, which really puts it into perspective for a buyer. But I want to ask, do you sell title insurance?
No, we do not. Now, I've been in that business before. I will tell you, it's been noticeably difficult to be in both businesses at the same time. To your point about, going to a title company and saying, "Will you close my loan, but I will not be buying title insurance." That's a difficult ask, for a couple of reasons. One, because it does cut into their margins and it cuts into their revenue, and the closing is actually the lower revenue portion of it for them. So they don't want to necessarily do that. And I don't want to say every title company, but a lot don't want to do that if they're not getting the title insurance premium, which is the bulk of their revenue. So we've encountered some difficulty in that regard. And I will say also, title insurance as an industry, they have a pretty large active trade group, which is called the American Land Title Association. And they've been pretty vocal about not wanting title insurance agents to close loans using alternative products. So you've got an industry of agents who are fearful that they can't do that, or they can't do it lawfully, which is not true. They can absolutely. Of course, you can close a loan without issuing a title insurance policy, but they've been led to believe otherwise, or they're fearful that there will be repercussions if they sort of move into this alternative space. So we've encountered obstacles in that regard as well.
In order for an underwriter to authorize an agent to underwrite their policy, does the title company have to be affiliated with an attorney to review the documents? Can they be recipients, the title company, can they be recipients of the proceeds of the being an agent to the underwriter without that attorney on the books or owning the actual company?
So that's state specific. Most title companies, I would say, are not necessarily owned by attorneys. And then in certain states, you do have to have an attorney to close. So in those states, there's a lot of overlap where an attorney will own the title company. But then there are also nuances in states like Texas where you've got a conflict if you've got the same ownership. So a lot of times it has to be different. And then there are, again, different nuances in terms of some states require an attorney to review the loan documents, and that has to be a separate attorney than the attorney that's sitting within the title company. So it is all very, very nuanced and state specific. And so it's going to depend on where you are.
Got it. So tell us about your service. So what is an attorney opinion letter?
So, in the very traditional sense, an attorney opinion letter is where an attorney comes in, reviews all of the title documentation, and says, based on my review, I would say that there's clear title. And if there's a lender involved, that the lender is in first lien position. And traditionally, that letter would come from an attorney. It would be addressed typically to the lender, and it would serve basically the same purpose as a lender's policy. Now, there are a couple of issues with that because of how it was situated traditionally, in that one, that sort of guarantee didn't extend beyond the addressee of the letter. So if the lender sold the loan, then it was a problem because the buyer of that loan couldn't enforce the opinion. Now, that wasn't as big of a problem 100 years ago as it is now. Our modern mortgage market is heavily secondary traded. And so that's a much different scenario that needed to be changed in order for this to be a viable modern option. And then sort of second to that is it wasn't addressed to the actual owner of the home. It was addressed to the lender typically. So the owner, if they wanted something similar, would have to go get another opinion. So they weren't protected. And like we've talked about, owners then, just like owners now, didn't necessarily know what they needed or that they were allowed to go get it. And so they didn't. So it left sort of the owners unprotected, and it didn't extend past the initial or original and originating lender. So what we did was take that concept and modernize it. And we did that by putting an insurance wrapper around it. So we have what we call a mortgage service provider's errors and omissions policy. It's a specialty policy that was created specifically for this product. One of my partners in Alita is in the insurance business. So this product was created and is exclusive to what we're doing. And it is basically it extends from the time the order comes in for the title policy or for the I'll say attorney opinion letter, all the way through the recording. Every part of that process is covered. Every person that touches it during that process, their actions are covered by this policy. So that makes it much different than a traditional attorney opinion letter. It also travels through the secondary market. So as you know, loans now get traded 3, 4, 5 times. And so what this insurance does is allows that coverage to remain with the loan all the way through, no matter how many times it gets traded, until it's terminated or re-originated, until it goes away, basically. What else it does is it addresses the attorney opinion letter not only to the lender, but to the borrower or the owner. So the homeowner is now protected by this as well, because like I mentioned before, we've always sort of looked at this as a singular risk. And so they don't need their own letter. They don't need their own policy. They can be protected because we've done the same title work. We're not doing it again for the owner. It's the same review. So they're getting protection from this letter, and it's extending for them through their ownership of the home.
Are you the only one that issues the, and I know you had said that this is sort of a new product 4 years ago. Are you right now the only company that is wrapping these attorney opinion letters with, or backing that with an insurance policy?
I believe there's maybe one or two others, just for complete transparency, in the market that are offering an insured attorney opinion letter. One I believe is basically a former iteration of what we're doing here. Another one is one that we don't honestly know much about. So, we haven't really gotten a good chance to kind of dig into it and see what it is. I know that the insurance is different. And I would say that that's really the distinguishing factor for us, is because if you can't provide every component of this insurance, then you've got a gap somewhere. And we spent, a great deal of time on this policy and working together with not only the underwriters who support it, which I will say are all AM Best A rated, very large financial size and strength insurance underwriters. So we get that question a lot, are these fly by night insurers? Absolutely not. They've been around forever. And they're also, a lot of them have provided reinsurance for title insurers in the past. They've provided the equivalent of title insurance in European countries. So they're familiar with title and they're familiar with the risk. And they actually looked at title claims data, because that data is available to licensed insurers. So they looked at that title claims data for a 60-year period. And they came to us and said, here's what we believe this risk is worth. And I will tell you, it is much, much different than you will see a title insurance premium cost you in certain states like Florida and Texas and Pennsylvania. So that's how we sort of came to the conclusion of, this is the insurance we need. I'll tell you, we also went through a very extensive review process with a couple of different independent law firms, because, I'm the primary sort of attorney that's been working on this. And for me, I think I'm good at what I do, but I also always want a second set of eyes on things. And so I went to a couple of independent attorneys, law firms, very reputable law firms in the mortgage space, and said, please review this and tear it apart. Tell me where I'm wrong. And so there were a couple of places where they said, I think this could be done a little bit differently, or I think you could improve this element of it. Great. So we did that. So now I'm very comfortable in saying that coverage is exactly where we want it to be. It's providing exactly what we want it to provide. And it is truly a viable alternative to title insurance in that regard.
So as you described, and I just want to clarify this, you're looking at title work, the abstract work that has already been performed in order to issue the attorney opinion letter. And I know you use the acronym AOL, which I think is funny because every time I think of AOL, I'm of the age that I still remember when we used to get those internet minutes in the mail, the discs. But anyway, the attorney opinion letters, you're still relying on a title company or somebody doing the actual work, right?
That's right. Yep.
So how does that, when you're such a conflict of interest to these providers, because you're taking essentially a large part of their revenue away, are you meeting much opposition and having these companies do all the work to kick it over to you to, help their client at that point with saving thousands of dollars?
So yes and no. We have seen opposition. We've had lots of providers that we've spoken to, and we don't seek them out. At this point, we've got people that reach out to us and say, "I'm interested to learn." And when they learn, I don't know what the expectation is coming in, but when they learn that you're not going to make as much money on a transaction with this, that in the same way that you would with title insurance, we've certainly had quite a few tell us we're not interested. Okay, understand. We've also got a whole segment that say, and this was the most this is the clearest way anyone's articulated it to me, but they said, we know that this is happening and we know that people are going to start asking for it very soon. And we don't want to have to say no when they do.
You just nailed it. I think it's amazing what you're doing. I get a lot of criticism from my peers for what we do, and we still sell properties. Regardless of the transparency, we still have sellers that are and I'm saying that the housing market's overheated and the prices are too high, and we still have sellers asking us to sell their house. So they appreciate the transparency. But one of the things that we have done, which is unique to our business, and I think one of the most catastrophic mistakes where we allowed this sort of market, to get out of hand, is brokers made their agents their client instead of the actual buyers and sellers of the property themselves. And they courted these agents, gave them everything, and it was all about numbers. And of course, now, with the consumers being way more intelligent than they have ever been, and of course, with the big lawsuit that the public won, essentially consumers won against the National Association of Realtors, you're doing something very smart, which I am doing as well, and that's going straight to the consumer. We're removing the agent as a client. They've never been my client. Agents have never been a customer of Sachs Realty. We always focus on the buyer and seller themselves, and that's what you're doing. And what you just described is you're going to have buyers that are going to be asking this for name by name, right? Because of your efforts and the work that you're doing, saving people money. So they're going to go to these agents now and say, I want to utilize this service. I want a letter. I don't want a policy because this is going to save me $4,000, $3,000, at closing. And I think you're spot on. How have you overcome the challenge? You said title work's been going on for 150 years, or title insurance policies. You said opinion letters predate that. How are you finding favor with the lenders themselves? Is there will a buyer have difficulty obtaining a loan from a lender because it's not an actual title insurance policy? It's an E&O policy that's wrapped around an attorney opinion letter.
So of all the groups we've talked about, I think the lenders have been most receptive to it. And I think at this point in time, we've talked to 100 lenders. I've never met one that said, this isn't necessary, or I think this is a bad idea. Every single one knows that something is needed, some alternative. And so they're all supportive of it as a concept. I will tell you, operationalizing it within a lender is it's a whole nother beast, right? It's a difficult thing to do. We've gone through a market in the most recent sort of while we've been working on this of lenders being short-staffed because originations are so low. So people are working with minimal resources. They don't have extra teams to throw to a new project. So we've dealt with some of those obstacles, but we're still moving forward with quite a few lenders. We've got lenders that, in the same vein of the provider I talked about, that know people are going to want this. And at the same time, if your originations are at historically low volumes, this gives you something to offer your borrowers. It's a competitive advantage. When you can go out into the market and say, I can offer you closing costs that are $1,000 less than lender B and lender C, why would you not do that? And so I think that's what lenders are starting to see, and that's why we're seeing so much traction. I will tell you, sort of the Fannie Mae Freddie Mac dynamic has been a big part of all of this, because obviously a lot of lenders sell loans to Fannie and Freddie. So if Fannie and Freddie don't accept something, it's very hard for most lenders to do anything with it. Just because I grew up sort of in this mortgage space, I knew that going into it. And so we took this to Fannie and Freddie right out of the gate. And we worked with them for a pretty long time. They don't do anything super quickly, but they have been all over this initiative. They have been super supportive. They understand the need for it. They have not done, contrary, there's been a lot of, I will say, opposition in the title insurance industry for the things that they've done, but none of it's been done hastily. They have put the time in, they've put the due diligence in to determine whether this product provides the coverage it says it does. They've done all that work. So ultimately, they did approve it. Fannie Mae changed their guidelines to allow acceptance of attorney opinion letters. And then they ultimately changed them a second time to sort of broaden the scope of that. And Freddie Mac has done the same thing. So at this point in time, they both accept these attorney opinion letters as an alternative to title insurance.
Well, that was a huge win.
Huge one. Never.
Yeah, that's
expected that.
And that's all 50 states. Regardless of, because I know, and I want to talk a little bit about the coverages, the difference between the two, but we don't have it so much here. A lot of the title fraud, because our transfer and recordation fees are very expensive. But I think in Texas, what's the fee in Texas, like $47 or something crazy. I've seen a couple, of the Altas, and it's just, and I don't know that they're $47, but it's cheap compared to a lot of states. So Fannie and Freddie have approved it in all 50 states?
It's approved in all 50 states. The only, there are certain parameters they have around it, which are very nuanced, but there's a handful of property types that they don't accept it on. Originally, that included condominiums and properties with HOAs, which was hugely problematic because HOA properties are all over the place now. So that really was a hindrance for a while, but now they've both changed their guidelines again to expand it and open it up to those properties. And that's been hugely impactful for us. Freddie just did that as of May 1st of this year. So that really started to drive a lot of the lenders into looking at this as something that they wanted to provide. And I'll tell you what else has really sort of sparked lender interest is the CFPB, the Consumer Financial Protection Bureau, a couple of months ago came out with what they call a request for information. So an RFI asking people for information on what they call junk fees. Now they looped title into that. I don't know that I would call title insurance a junk fee necessarily, but they talked about essentially making the lenders pay for lenders' title insurance, because the question was, why is a consumer paying for something that benefits a lender? Now that has sparked a lot of movement with lenders and saying, well, if this is something that we're going to ultimately have to pay for, then we definitely want to look at a less expensive option if it provides the same coverage. And so that's been an interesting conversation as well.
Yeah, you could say the same thing about appraisal fees. Appraisers work for the lenders. The buyers pay it. Buyers think it's really for them. It's not. I want to pull up your website. More specifically, I want to look at some of these savings that you have published. So, Stacy, so can you kind of explain to us what we're looking at here? You have 3 examples.
Yeah, so we when we initially did these examples, interesting, we had more detail in them, but as with, I think it's very indicative of what borrowers especially think when they see a settlement statement, because you always get that sort of estimated closing disclosure before you close the loan. It's confusing. And so, I will say I sold a house in Florida a couple of years ago in the midst of all of this, and I was still confused by what they had on that settlement statement. So we meant to, we kind of simplified this for a better kind of illustration, but we basically looked at, what is it, a purchase, is it a refi? You're always going to see a little bit more savings when we've got a purchase scenario, because title insurance is more expensive in those scenarios, loan amounts, and then what we did with title insurance fees. So if you ever have looked at a settlement statement, those title insurance related fees can be more than 3 or 4. It can add up, right? So there would be the premium for the lender's policy, the premium for the owner's policy. You've often got a commitment fee. You've got several endorsements on there, which is just adding additional coverages. So it can be, 6, 7 charges. So what we did was add all those up, call it the total title insurance fees, because those are the fees that are being replaced by the AOL fee. And then the AOL fee is basically the cost of the attorney opinion letter, and then also the cost of the search and exam that goes with it. And that search and exam is also included in the title insurance fees, so that we're actually looking at apples to apples here. But that's what the comparisons are. And these savings are very real because of that.
And this is money out of pocket at closing.
This is a
Yeah, that's a closing cost. So when you're looking as a home buyer, and I'm more concerned and focused on this because where our consumers have really been hurt the most. Well, there's multiple ways that they've been hurt in the home buying process, but it's down payment money. It's cash to close. And, if you think about looking at some of these, and these numbers are really realistic when you're looking at median home prices anymore. I mean, we're not Stacy, in my opinion, these numbers these are very realistic numbers when you're talking about purchase prices and loan prices, a loan amount, $700,000 or $675, or even the $392. When you're looking at these savings, guys, this is really the cost of, a major repair. So when you look at, somebody buying a house and they're buying, something that's dated, and they, in their first year, all of a sudden the heating and air system stops working, or, they get a roof leak or something of that nature, where they have to fix it. These aren't things that you can just say, okay, I'm just going to live with it. The things that have to be fixed. This is why I'm talking to Stacy and bringing Stacy to you guys, because of this right here. This is massive, massive savings. So let's talk about the differences between the two, because I have a couple scenarios that I want to kind of run through. How does it handle, and you excuse my ignorance, because I'm not a title provider, insurance provider. I don't know. I don't look at the exclusions so much, but I can tell you that I bought a property in Baltimore City, and this was, oh my gosh, this is probably 15 years ago. It was probably longer than that, because maybe it was 20 years ago, because at this point I was buying policies because I was getting loans out for the properties that I was buying. And this was, a situation where I bought several properties on a block virtually the same time, and right next to each other, a portfolio from someone else. And there was an encroachment on the one property that was on the end of the line. And there was an encroachment. And so what happened was, the people that I bought it from actually built an addition without a permit. And so this neighbor decided that they were going to wait until I bought it, I guess, to complain about it. And they said, hey, by the way, your property's on my property. And I'm like, at the time, the lenders were requiring a survey, not really an accurate survey, but just a very informal, plat, which I paid for. I think it was $350 for this property. And I called the title company up. I said, look, we got a problem. And, they said, well, if you look at the plat, the drawing, it says plus or minus 6 inches or whatever. And your property's just literally touching the neighbor or extending the neighbor. This is not something that we would pay out on. And I'm like, that was the biggest red flag for me 20 years ago, probably. In like, well, what? There are exclusions, obviously, in these policies. There's things that you won't cover. So sort of uncover that as we kind of go through these scenarios. But first we'll start talking about liens, because you had mentioned, and one of the things as a builder contractor, mechanic liens are probably the most dangerous. Here in Maryland, you have up to 6 months to file a mechanic's lien on an unpaid, bill from a homeowner, and they sell the property. You knock on the door and say, hey, by the way, here's your mechanic's lien. You owe me $15,000 because your seller never paid my bill. Are liens discovered after closing or missed liens with a attorney opinion letter? Is it basically the same as a title policy?
So it's actually two different questions in one. The answer is yes, they would be treated the same as a title insurance policy. To the extent that it was discoverable at the time that the title work was done, right? So if it happens, now I will say we're able to cover through the recording process. So if something happens before the recording, which depending on where you're at, again, that can take several weeks. But if something happens before that, it's covered. If there is something if there's just no way that our title reviewers could have ever found it, it wasn't indexed, it wasn't there, it comes up after, that's not going to be covered by our product. But I will tell you, I'm pretty sure that's not covered by title insurance either. Because it is situated as, and I always talk about it in this regard, which it's insured, it's not insurance. So we're not selling an insurance product. So we can't say that we're going to cover anything and everything that ever happens. We can cover the work that we do, because we're insuring the work. And so if it's out there, if we find it, or if it's preventable. So if it's fraud, if it's borrower fraud or somebody coming into the title company and pretending to be somebody else, that could theoretically be prevented if you were doing your job properly. So that is covered by our product. But unfortunately, we can't cover things that happen 6 months down the road. And this is always, my statement as well. Title insurance says that they cover a lot, but you have to look at your policy, because you have to look at not only what they call exclusions, but you've got exceptions, which list all of the things that they are not going to cover. And a lot of times, liens that are filed after their date of recording are not covered. Most times, I would say.
Yeah, I mean, so that in itself, when you're looking at a title policy and you think that you're covered, you're not. Good luck trying to go back. How about the encroachment issue? How is that dealt with? I mean, that's a big deal.
Yeah. So I will say that is covered by what we provide. Now, how it's dealt with, I think, is going to depend on the situation. It's going to depend on the actual title company that you use to close the loan. There may be a way to remedy it depending on how severe it is. It may be a loss that just gets paid. And that's just going to, and I also think it depends on how your neighbor chooses to handle it, right? So all of that is there, but that is something that is covered by our product. And I will say that one of the differences is that the insurers who support our product, who provide the insurance wrapper, they are not title insurers. And I say that to say that they are different in the way that they approach insurance and the way that they approach claims. Their claims payment rates are 30 to 40%, which is very average for a specialty insurer like that. Title insurance claims payment rates are 3 to 4% in a good year. Now, it's just to be candid and to be fair, the argument to support that is to say, well, they do all of this curative work on the front end so that their claims are so low. Yes, that's true, but also they deny most of the claims and they don't pay them. So that's also a contributing factor, right?
As I'm thinking of all this, we had a blockchain conversation earlier. I'm seeing how this blockchain technology is going to help you. I see how you will be able to provide maybe even the title services if we embrace this blockchain, because a lot of what we're talking about, the human errors will be eliminated, and if anyway, they're going to deny most of the claims that are brought against the policy anyway. It's not going to take long for that to get fixed if we really want to fix some of these loopholes. What about as far as fraud? We had a situation recently, and I'm embarrassed to say it, that happened to us. It didn't actually happen. Well, it did and it didn't. I'll explain. So vacant land. We're in a situation right now where, people are looking for alternatives. Hey, if I could buy a lot and build a modular home or even a custom, stick-built house, it doesn't matter. That may be a better alternative for them, considering there's not a lot of inventory that they are happy with in the market or the area. So with vacant land, we had a situation where we had a seller, of course, out of state. We couldn't meet with them. Provided identification, had a driver's license with the name and a photo ID, and wanted to sell a piece of property, actually 2 lots, sorry. And we list the property. A couple weeks later, the next owner says, hey, you're advertising my property for sale, and it's not for sale. And I'm the real owner. So we're like, okay, well, one of the properties was under contract. So we actually, the non-owner that claimed to be the owner executed the contract of sale, and it's in the hands of the title company waiting closing. We're like, well, we've got it under contract. Look at the IDs. Well, clearly there's a difference in IDs. Try to go back to the other guy. He vanishes and, doesn't take our calls. We take the properties off the market, explain to the buyer, hey, this may have been a fraudulent situation. Is there a possibility that would have closed? And what would have happened in that scenario with let's just say the buyer builds their dream house even on the property, gets a construction loan and even starts to put the property, build a property. In that scenario, what would happen with the attorney opinion letters, a service that you provide, or a title policy?
Yeah, that's obviously a case of fraud, right? And I think it's unfortunate, but I think it happens. And there have been studies, right? It's happening more and more. But that is something that, because theoretically, like I say, I don't want to say it's 100% preventable, because you don't always, it's hard to tell in a lot of scenarios. But theoretically, because it is preventable, that is something that would be covered by our insurance. And so at the end of the day, I think it depends on how, again, it's always situational, right? Like what happens if the house gets built, if it gets half built, are you able to cure the issue and actually get the land transferred over for some amount of money, or is it a total loss? Whatever those scenarios might be, it is covered up to the amount that was paid for the property. So it's a full coverage in that scenario.
But just the land.
Yeah, just the land.
Yeah.
Yeah.
Okay. Do you think it would have closed?
I think that there would have had to be more diligence done, like in the closing process. If it were carefully done, if it were appropriately done, probably not. But I guess I don't know how good that ID was. I don't know what their process would have been. You've always got, notaries are there for a reason. So there should be some more checking that's done in that process, the wiring, all of those things. But again, I think it depends on how careful the processor and the closer were.
Yeah, now you have those remote notaries.
Yeah.
So they're even more. They have the camera, they're recording everything. But again, I mean, it's scary. Tell us the downsides. Are there any downsides to taking? We're comparing the scenarios back and forth. Is there any situation where having an attorney opinion letter would be less advantageous than a title policy?
Not in my opinion. We've designed it so that it provides comparable coverage. Look, if you've got a property that's gone through a million issues and you find it to just be a really problematic property and you have some expectation that something completely unexpected may happen, maybe you get a title policy. Or if you're in a jurisdiction, frankly, there are some states where title insurance is not that expensive. And especially in a refi context, there are some Midwestern states where it's really not very expensive at all. So there may be situations where it's less expensive to get title insurance, but there are states like we looked at the examples of that it's much more expensive. So I think it just depends on it's a bit circumstantial, but you can easily most of the lenders we talk to want to do it in certain locations because it makes a lot of sense in certain jurisdictions versus others. So I think that's probably the biggest determining factor. But as far as coverage goes, it's as close to title insurance as it can be without being title insurance. And that's an important distinction because title insurance regulations are what make it so expensive. And so we have to stay outside the bounds of those, right? So we have to provide our insured attorney opinion letter, which is not insurance, and which allows us to charge what we feel the risk is worth, which happens to be much less than title insurance.
What happens if you go out of business?
Doesn't matter. So that was a big component of it as well. Alita Group could go out of business. The attorney that writes the letter could go out of business. The title insurance company or title agent that does the title review work could go out of business. That insurance stays with the loan. And like I said, those insurers are large. They've been around. I told you the name, you would recognize it. Been around for a very long time. They're not going anywhere. They're highly regulated. They've got reinsurance behind them. And this policy is specifically set up so that it does not go away if any of the providers go away. So you'll be covered. And like I said, it's in the secondary market. It goes through that. It's even actually got special coverage that benefits the secondary market more so than title insurance. I know that's not necessarily the audience we have here, but that's always something we like to bring up. So it's not going away. It's not something you have to worry about if we go out of business or anybody else in the process goes out of business.
Well, Stacy, I'm excited to watch your business grow, and congratulations. I think it's amazing. Congratulations on stepping out, starting your own company, and focusing in on something that is geared towards helping consumers, which really need every bit of help that they can get nowadays to achieve homeownership. So anything else in closing that you would like to say? Can consumers reach out to you directly?
Absolutely. Yeah. I think, I'm happy to give my contact information. I would say it feels to me like it's a perfect storm of a time in the housing market and the economy for something like this. I will not pretend to say that that's my doing. I just happened to come along at the right time. We put this out in the market at the right time, and it's a pivotal moment for, I think, housing, for homeownership. And I think what we're doing, I just want to make sure people understand that is truly for the benefit of the consumer. That's what's driving this. It's not a trick. It's meant to save people money because we think that this is the time for that to happen. So that's, that would be my final statement. People are more than welcome to reach out to me. We are working with private lenders, private investors like yourself that are buying properties. We're working with institutional lenders, banks. Happy to answer any questions that anybody has about it. And you can always reach me. It's stacy@alitagroup.com.
We'll publish all of your links below in the show notes. And thank you so much, and look forward to following up with you soon.
You as well. Thank you so much. I appreciate it.
Hey, thanks for making it to the end. If you like the video, you can let Stacy and I know that you did by smashing that thumbs up. Actually, that helps other people. The algorithm picks it up even more, helps other people find this video. And if you haven't subscribed to our channel, consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments coming. And friends, one of the best compliments that you can do for me is to share our channel and this video with your family and friends. This will help us to continue to build the most amazing online community together. Love you guys. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.